My name is Daniel Culbertson. I'm a senior economist with the Indeed Hiring Lab, here to give you all a U.S. labor market update. I think this deck will give you a good temp check of what's going on in the labor market. A couple of things to plug before I get going. So I mentioned the Indeed Hiring Lab. That is our economics research group that we have on staff to dig through all of Indeed's data, the job search, the job postings, some of the resume information that we have. All of the research that is done by the Hiring Lab lives on our blog site at hiringlab.org. That is a free resource that is available to anyone, free but not cheap, I like to say. That is accessible to everyone. We update that probably about once a week with new information and new research and labor market commentary, so I encourage you all to check that out. And then also, you'll get a copy of these slides as well. So no need to take notes or anything like that. Pictures, you can if you want, but you'll have a copy of these slides at some point. All right, there are 5 topics to cover to get a good overview of the labor market. So we'll talk about supply and demand, we'll talk about wages, remote work, labor market data that we're watching very closely, and then wrap things up with a little bit of talk about possibility of recession, what to expect in the future. But I'll preface that with I don't have a crystal ball either, but some thoughts to share. But if there is a common thread to draw through all of this, is that the labor market is still on solid ground. The labor market's quite healthy right now. A lot of that data is coming in very strong. It feels like we're in a recession, or it feels like the labor market is slowing down to a very large degree because we're still coming down from those post-pandemic highs of 2 years ago. Everyone was trying to hire at the same time. The economy was coming roaring back. That put us in a very unusual spot. That pushed our economy up in a lot of ways that we're still dealing with. But we are coming down from that. So our labor market is slowing down, but we're getting back to, for lack of a better term, the normal that we had pre-pandemic. And I think you're going to see that trend in a lot of these charts. But starting off with where our labor market stands from a supply and demand standpoint. So it is still a very difficult labor market to hire in. I know you all experience this every day. Economists know this from this stat from the Bureau of Labor Statistics. We often compare unemployed workers to job openings just to get a sense of the balance of the labor market. This chart shows that rate of openings per unemployed worker. This hit an all-time high of 2 early last year, meaning that there were 2 job openings out there for every unemployed worker. Shows you how out of balance the labor market was. Things have improved a little bit since then. You can see on the far right side of that chart, this has come down a bit. There's now about 1.5 job openings out there per unemployed worker. Still a lot of options for job seekers, but we have seen some improvement coming down from that post-pandemic high. We're still very far out of balance. Compare where we are now to that left side of the chart, pre-pandemic, which was a strong labor market with a lot of hiring going on. Balance of power was towards the job seeker there, and we're still not all the way back to that point yet. When I say that demand for workers has slowed down a bit, this is something that we can see right on the Indeed site. So this is Indeed data here. We're looking at overall job postings on the Indeed site. So any and all types of job postings, however, we do factor out sponsored jobs. So we're looking at our organic traffic. And we follow this because this is essentially a measure of demand for workers. We show this as an index. So February 1st, 2020 is equal to 100 on the left side of the chart. And you can see how job postings have trended since then. So we lost 40% of the job postings on our site during the onset of the pandemic. We had that recovery where everyone was hiring at the same time. That peaked in late 2021. And since then, the labor market's been slowing down. Job postings have been slowly falling on our site. As of September 15th of this month, we're down about 14% from the same time last year. So that's the labor market cooling off a bit. A little bit less demand for workers. I will note that if you compare where we are now to pre-pandemic, we still have about 30% more jobs on our site now than we did pre-pandemic. So still very healthy demand for workers, but we have seen that consistently come down over the past year. This looks a little bit different depending on what job category or what part of the labor market you're looking at. So this is that same data broken out into some of our job categories. Before I go into this, I'll note that on our site, hiringlab.org, if you click data at the top right of the page, that'll take you to a chart that looks a lot like this one. You can plug in different countries, different states, different metro areas, and different job categories, and pull all this job posting data yourself, make your own charts. You can download the data. It's all there at your fingertips. But this is just a few examples to give you a sense of some of those differences we see across the labor market. So what immediately might stand out here is quite a decline that we've seen in software development roles. And anything also tech and some corporate-related roles, we've seen quite a decline over the past year. There's been a tremendous pullback. Software development job postings are now below their pre-pandemic trend. That's one of the few categories that has fallen that far. Nursing is a good example of a category that's held up well, which is typically the case. Healthcare does pretty well, almost no matter what's going on in the economy. So we've seen nursing demand postings hold up pretty well. They've been pretty stable over the past couple months. They're above the overall labor market. Retail has been bouncing along and is about overall in line with the rest of the labor market. So these job posting trends and the demand for workers, there's always going to be some differences there, and this illustrates some of those, but I encourage you all to check that out at hiringlab.org. All that data is available for you all. Something else I wanted to cover on the demand side is temp workers, staffing employment. This is something that typically we watch very closely because staffing employment is a little bit more responsive to what's going on in the economy. Staffing tends to decline before the overall labor market, and it tends to bounce back quicker. And so we've been keeping an eye on this, and what we've seen in the past months is that staffing employment has actually started to fall. Sorry, I should call out that this is Bureau of Labor Statistics data. This is what they call temporary help services, staffing. We've seen that fall over the past year, which typically does raise a lot of eyebrows. Typically, staffing employment falling could be a precursor to a recession, I should say. However, we've been keeping a close eye on this. There's probably some other reasons at play as to why this maybe has fallen over the past year that may not necessarily mean a recession is coming. For one, this could be a sign that the labor market's holding up so relatively well that employers are confident enough to hire full-time workers. Another factor at play here is how many healthcare companies have been making a switch away from traveling nurses and staffing and bringing that back in-house. So this is something that we'll be keeping an eye on, but we are seeing quite a slowdown in temporary workers on par with the rest of the labor market. Switching to the supply side, this is where there's been some good news, and this has been something that's changed since I was here this time last year. We've started to see workers, or we've continued to see workers come back, and they started to come back in a big way. So when we look at labor force participation, this is the share of our population that's either working or looking for work. This is measured by the BLS. That labor force participation rate has climbed pretty consistently over the past year, and it has surpassed its pre-pandemic baseline. So when we look at prime-aged workers, those aged 25 to 54, we now have as active of a labor force that we had pre-pandemic, even a bit more so as this has continued to improve. So all in all, labor supply has improved. It's not completely healed. We probably don't have all the workers that we would like. I'll point out that this line is focused on prime-age workers, 25 to 54. If you drew this same line for younger workers, aged 16 to 24, or older workers, those aged older than 54, neither one of those lines has recovered to where they were pre-pandemic. So younger workers and older workers have not come back to the labor force in quite the numbers that they were pre-pandemic. Older workers, could be a lot of them took an early retirement. It remains to be seen how many are going to be coming back. Ben's book calls out something very important, which is recruiting in a very tight labor market, or in a labor market that's probably not as plentiful as we would like. When we think about labor supply moving forward, it's unclear whether or not it's going to continue to improve. We do have some factors working against labor supply, mostly all tied to demographics. Baby boomers retired at a higher rate during the pandemic. They're going to continue to retire. That is a large segment of our labor force that is going to be leaving. And they all carry unique experiences and skills and occupational preferences with them. We have younger workers coming in, but probably not nearly at the volume that we would like. Immigration went on pause during the pandemic. That is coming back, but we are short foreign-born workers. And then also, we've had slow population growth here in the United States. Also, developed markets around the globe are experiencing this for quite some time. We recently hit a 100-year low in our birth rate. That doesn't bode well for the coming decades in terms of growing our own labor supply. And so while we can hope that we continue to get workers back to the labor force, and we would like to see some growth there. There are some factors that we should be keeping in mind that are likely going to keep our labor market pretty tight moving forward. I wanted to cover what we've seen in wage growth because this was such a big story in the labor market coming out of the pandemic. There was a lot of pressure, upward pressure on wages just because of how high demand for workers was and how small supply was. And we saw that on our site. So this is our Indeed wage growth tracker. We focus here on the wages and salaries listed inside of job postings on our site. Indeed does a lot of estimating of salaries. If there's non-employer provided information, we're throwing all that out here and we're just focused on employer provided wages and salaries, tracking that over time so we can get a sense of how wages are changing on our site. This looks a lot like some of the public measures, which we compare it to make sure it's telling us something reasonable about the labor market. But what our data tells us is that wages were pushed up quite significantly. In early 2022, wage growth on our site peaked at about 9% year over year. But the good news is that this has fallen back down with demand weakening a bit, supply improving. That post-pandemic hiring frenzy is behind us. We've seen wage growth slow back down to about 4.5% as of August of this year. So a lot of those wage pressures have come and gone. However, wages are still growing, and they're still growing quite strong. At 4.5%, wage growth is still well above where it was pre-pandemic. And as is always the case, this looks different depending on what category or what area of the labor market you're looking at. There are some categories, for example, administrative assistance, customer service, that are still above that overall labor market average of 4.5% wage growth. Some of the areas where we've seen quite a slowdown, software development for one, we've seen a lot of those wage pressures go away almost completely. Something else that we watch on our site, and we recently did an update on hiringlab.org, is salary transparency. And so I mentioned for some of that earlier data, we were relying on employers providing information about wages and salaries inside of job postings. That's something that we are seeing more and more. This chart is from our earlier research this year, in our most recent research that just came out on the blog last week. Looking across the site, 50% of the job postings on Indeed listed a wage or salary right inside of the job posting, which I think speaks to how common that is and how important that is when it comes to talent attraction. Salary transparency is quickly becoming the norm. Depending on what area of the labor market you're looking to recruit in, this picture can look a little bit different. This is different job categories comparing February of last year to February of this year, what their share of job postings listed as salary was. Different levels for sure, but what you'll notice is that these are all moving to the right, is becoming more common to including a salary. For example, in loading and stocking, which is a lot of those warehousing roles, it was always pretty common to include a salary. Now it's over half. Even in somewhere like human resources, which it was not very common in February of 2022. We've seen quite a jump there. And one interesting piece about this research is while there are a lot of states and metro areas that are passing legislation to require salary transparency, even when we exclude all that and just focus on areas that don't have any legislation, we're still seeing that salary transparency grow. And so that's becoming a larger part of recruiting and attracting talent. Remote work we track on our site through a couple different ways. I will say that I still think we're going through that period of companies and employers figuring out what is best for them when it comes to remote work. However, on our site, we can see this both from the employer side with our job posting data and the job seeker side with our searches. But starting out with employer postings, that includes some type of keyword related to remote work. This chart is showing the share postings on our site that include anything related to remote work, from hybrid, fully remote, 1 to 2 days a week, flexible, whatever it is. You'll notice that this has come down a bit over the past year. I'll point out that this is still very close to its all-time high. So it's not like remote opportunity is going away across the board. This has fallen over the past year. Remember that software development job posting trend that was taking a dive? A lot of tech roles and a lot of corporate roles are slowing down across the labor market and slowing down on our site. They tend to have a high share of remote jobs. That's likely what is dragging this trend down. But like I said, still plenty of remote work opportunity out there and still plenty of interest from job seekers. When we look at the share of searches on our site that mention a keyword related to remote work, it's close to 10%, and this is leveled off nearly as high as it ever was. And when you consider when someone comes to our site to start a job search, they have that what and where box. They can type whatever they want into that what box. Still 10% of those searches are coming up related to remote work. So it just shows it's still top of mind for job seekers. Going back to the posting data, it's a bit of a mixed bag when it comes to the opportunities that are out there for remote work. This chart compares postings by job category, featuring a mention of remote work, comparing May of last year to May of this year. And we do see some key changes there. So there are some areas of the labor market where May to May, opportunities in remote work were still growing. So legal, software development, accounting, IT, still growing remote opportunities. At the bottom of the chart, we have some corporate roles, media and comms, marketing, human resources, where we are starting to see remote work opportunities fall a little bit. And so, like I mentioned at the top, it is still a bit of a mixed bag. Employers are figuring out what works best for them. Job seekers are as well. And we're likely going to continue to see that moving forward for the meantime. This is something that we're going to update on the blog soon. So there will be an update on remote work at hiringlab.org. I wanted to cover some of the data that we're keeping a very close eye on. So there's still, I feel like I've been saying this for a year and a half, going on 2 years now. There's still a lot of uncertainty out there in the economy. Throughout all of that uncertainty, the labor market has been holding up pretty well, and we want to know if that's changing. So there's data that we watch very closely, and that boils down to hires, quits, and layoffs. This is all Bureau of Labor Statistics data. It comes out with a 2-month lag, so that July data point is the most recent one we have. Hiring we're watching because, as you all know, one of the first things employers do in the light of economic turmoil is pull back on hiring. We've seen a little bit of that so far, but no real cause for alarm here yet, and here's why. So this is the hiring rate, the number of hires every month as a share of total employment. And we're just looking for level changes here, but you can see that over the past year, hiring has slowed down quite a bit. However, where we are as of July is pretty much right where we were pre-pandemic, if you make that comparison on the chart. And pre-pandemic, very strong labor market, a lot of hiring going on then, certainly still a lot of hiring going on now. If this were to consistently fall further this year, that would be a sign that employers are pulling back across the board, and that would raise a lot of eyebrows, but we haven't necessarily seen that yet. One change that we have seen in the labor market, though, and this is great news for employers and from the recruiting standpoint, is that great resignation that we talked about for so long 2 years ago is behind us. When we look at the share of workers who are voluntarily quitting their job every month, so this doesn't factor in retirements, anything like that, this is just people quitting. That quits rate has come down pretty remarkably over the past year, and it's basically right back to where it was pre-pandemic level. So workers are getting a little more cautious and holding on to the job that they have, which is what we typically see when the labor market slows down. So like I said, great news from a recruiting standpoint. Workers are a little more stationary at the moment. It's still a pretty high level of quits. You'll notice that that pre-pandemic level, that was the previous all-time high. So there's still churn in the labor market, but we've seen that slow down. The other thing we're watching very closely is layoffs. We heard a lot about this over the past year. There was certainly a slowdown inside of tech, but that seemed to be largely concentrated to tech. They seem to be going through a bit of an correction for maybe overhiring in 2021, 2022, and we saw a lot of announcements of layoffs, but when we look at our overall layoff data across the labor market, there's a little bit of a bump there. But this is still pretty flat, and it's still below that pre-pandemic trend of just the normal level of churn that we see in the labor market. So no real cause for alarm when it comes to the layoffs too so far, but again, something we'll watch very closely. If this starts to rise or this spikes, it's a very clear indicator that the labor market's changing. So that leaves us with the road ahead, thinking about that possibility of recession, which is certainly still out there, and what that all means for the labor market. I mentioned we don't do any of our own forecasting, so I don't have my own forecast that I can point to here. I don't have my own crystal ball, but some good food for thought maybe. A recession is still certainly a possibility. I mentioned it feels like everything is slowing down. It may feel like we're in a recession because we're coming down from those post-pandemic highs, but by and large, economic data is still pretty healthy. For one, economic growth has come in positive the past 3 quarters. So it doesn't certainly appear that we are in a recession right now. Labor market data is still coming in strong, so is other various economic data. But however, that risk of recession is still out there. The Fed paused on interest rates earlier this month, but it's still a possibility they could increase again. But nonetheless, what they've been doing the past year and a half, raising interest rates, they're trying to slow down the economy, get inflation under control. Always a possibility that they tip us back into a recession, but that hasn't happened yet. That possibility of recession is still out there. In lieu of my own forecast, I like to point to this Wall Street Journal survey of economic forecasters. They run this every quarter. They survey a group of economists and ask them a lot of questions about their forecasts. One of the questions being, what are your odds of recession within the next year? In the July numbers, they actually ticked down a bit from April, as you can see here. But in July, according to this group of economists, their odds of recession were still pretty elevated at about 54%. So about a coin flip. I wouldn't get too lost in the preciseness of these numbers. One important takeaway here is that the outlook brightened a little bit in the past couple months. A couple important caveats here. When you're thinking about this, keep in mind that economists have a pretty bad track record when it comes to predicting recessions anyway. So I would take all this with a grain of salt. Also, I've said it before, I'll say it again, it's very uncertain times right now. This group of economists has their odds of recession at 50%. Goldman Sachs, for example, just lowered their odds of recession to 15%. So it's a very wide range of forecasts that we're getting from economists. So keep all that in mind, and also keep in mind that while that labor market is slowing down, labor market data is still coming in pretty healthy. And that still leaves us in that labor market that is very far out of balance, like we saw on that first chart. So everything that you've been thinking about doing in your recruiting practices for the past 3 years to recruit in a tight labor market, I think still remains valid today. From the economist perspective, I imagine you're going to have a lot of sessions during this conference that are very recruiting focused, and you're going to get into some of the details on some of these maybe, but from the economist perspective, I would say pay is still important. Even with wage growth slowing down, pay is always going to be important in a tight labor market. Being transparent about that pay. If you're competitive in certain markets, by all means, throw that right inside of the job postings. If you're not as competitive as you would like to be in some markets, maybe accentuate other areas of the job posting, whether that's flexibility, bonuses, total compensation, benefits, whatever it is. Deepen your talent pool any which way you can. That could mean job training, bringing people in from other industries. It could mean letting your recruiters know, do not screen out people who have gaps on resumes or have a lot of job hopping on resumes. That's going to remain very common in our labor market, and those people probably warrant a second or a third look. Also, fair chance and second chance hiring is something that we see popping up on our site more often, both from the employer and the job seeker side. If there's anything you have in your recruiting practices that are very restrictive on backgrounds and criminal records, if those can be loosened, that's a great way to open up that funnel. Somewhat related to that, anything else that's restrictive in the hiring process, drug testing, anything like that, if those can be loosened up, great way to open up that funnel. And then lastly, remote work and flexibility. We saw some of that data. There's still plenty of remote opportunity out there. There's still plenty of interest from job seekers as well. Remote work doesn't work for the majority. The large majority of our labor force and our jobs cannot be done remotely. But for those that it can, if it's an option for you, explore that and be very clear about that, what remote work means at your company inside of the job postings. And then also flexibility in general for those on-site roles. Whether that's flexible scheduling, shift swapping, whatever it is, to make those roles more flexible. Something that is very important in our labor market right now that didn't make it into this deck is childcare. When the BLS runs its monthly survey and it asks workers who aren't participating in the labor force as to the reasons why, childcare is one of the top reasons. It became less affordable and less accessible coming out of the pandemic. So any benefits you have, any flexibility you can put in those on-site roles around childcare as well is a great way to attract workers. And then lastly, I don't know if I've mentioned it yet, but hiringlab.org is our blog site. All of our research lives there, and that's accessible to anyone. We update that about once a week. A lot of the trends that we just saw are updated there on a regular basis. So I encourage you all to check that out. Thank you for your time.